If you'd invested $10,000 into SpaceX in 2020, you'd have 10x'd your money in 5 years. And despite how far this company has come, it's still insanely early for Elon Musk's rocket startup. Base case projections have SpaceX reaching a $2.5 trillion valuation in the next 4 years. The only problem is that SpaceX isn't public. Its multi-bag returns belong to just a handful of wealthy venture capitalists with the connections to Elon. But as of this video, that's about to change, because I found a stock that gives retail investors exposure to SpaceX on any brokerage platform, and it even offers cheap call options until 2028. In this video, I'll explain my thesis on a company that I've identified to be the ultimate SpaceX proxy. It was on the verge of bankruptcy, but now it's basically a direct trade on one of the world's most important and fast-growing companies. Before we begin, remember these videos are for informational purposes only. They are not financial advice, and the full disclaimer is in my description. Before I walk you through the stock I found, I've got to establish why any rational investor would want SpaceX stock, because the next 5 years for this company, I think they're going to be some of the most exciting ever. With SpaceX, you're not just buying a piece of a company, you're becoming an owner in civilization infrastructure, the machinery that could extend human life beyond Earth. A few years ago, Starbase Texas was nothing but a sandbar. Now it's a functioning city built around the world's biggest rocket factory. Elon Musk calls it the first new American city in decades, a place built for one purpose: to make life multi-planetary. And he's not speaking in hypotheticals. SpaceX can already build a new Starship every few weeks and plans to scale out to 1,000 per year in what Musk calls Gigabay, a building that could become the largest structure on Earth. Each Starship is larger than a 747, capable of carrying 150 tons to orbit, and when reusability becomes routine, Musk says each booster could be reflown within an hour of landing. That's commercial airliner turnaround time for an interplanetary rocket. Falcon 9 made space accessible, and it's given SpaceX a virtual monopoly over the launch market. But it's Starship that will truly change the economics of space. It's the key to building a bridge to Mars, enough to make the planet self-sustaining if this Earth ever falters. Now, powering this ambition is Starlink, which is SpaceX's infinite money glitch, delivering high-speed internet from a constellation of over 8,000 satellites. In fact, over half of satellites currently in orbit are Starlinks. If Amazon Web Services was the profit center that made Amazon's e-commerce possible, Starlink is what will make Mars happen. It's not just broadband, this is the financial backbone funding humanity's expansion into space. Musk has said that every Starlink router on Earth is helping pay for civilization's future. And by 2035, ARK Invest projects Starlink could pull in $300 billion a year, roughly 15% of all global communications spending. And beyond Starlink lies Starshield, a classified government-focused division building a parallel defense network in orbit. SpaceX isn't just a rocket company anymore. It's building the backbone of a multi-planet civilization, rockets, internet, defense, and infrastructure on an interstellar scale. Starship unlocks Mars, Starlink unlocks global broadband dominance, Starshield unlocks defense, and retail investors locked out unless you know where to look and you listen to the next section very carefully. On the surface, EchoStar looks like the farthest thing from a high upside stock, but you'll see fast why this story is full of hidden and misinterpreted value. Charlie Ergen started EchoStar in 1980 to provide TV to rural homes with limited access to cable. And before that, he was a professional blackjack player who got kicked out of casinos for counting cards. This high-risk mindset made him the billionaire who reshaped American telecom. In 1990, he raised $335 million through junk bonds to buy critical orbital slots. Most people thought he was insane, but it enabled Charlie to launch Dish Network in 1996 to disrupt traditional cable TV with satellites. Dish could offer 10 times the channel of cable systems with superior picture quality, and it grew from 1 million subscribers in 97 to a peak of 14 million by 2009. But Charlie's real genius was understanding the spectrum. Spectrum is basically invisible communications real estate. It's the radio frequencies that carry everything from your Wi-Fi to your phone calls. The more spectrum you own, the more data you can move through the air, and there's only so much of it. Charlie understood that spectrum is a scarce asset that would only ever appreciate in value. It's highly regulated and it's very difficult to obtain. That's why in the 2010s, Dish embarked on a multi-billion-dollar effort to accumulate one of the largest spectrum portfolios. But after years of not using them, the Federal Communications Commission started investigating EchoStar earlier this year. At the same time, the company was drowning in nearly $27 billion of debt and on the verge of bankruptcy. But just recently, two massive deals changed everything. In August, EchoStar agreed to sell Spectrum to AT&T in a $23 billion cash deal, and it wasn't just an asset sale. AT&T became EchoStar's primary network services partner for its Boost Mobile subsidiary, instantly making that business more viable. But then came the deal that truly transformed EchoStar and forms the core of my thesis. In September, SpaceX struck a deal to buy $17 billion worth of Spectrum, paid as $8.5 billion in cash plus $8.5 billion in SpaceX equity. The deal gave EchoStar roughly 2% ownership of SpaceX. And on top of this, SpaceX put $2 billion into a trust that covers EchoStar's debt payments through 2027. These two deals, which I should mention aren't closed but are expected to in the next few years, make EchoStar a highly investable company. We're talking about going from $27 billion in net debt to what I project will be roughly $17 billion in net cash after accounting for the company's remaining debt obligations and the transaction costs of closing these deals. And of course, the biggest line item, a stake in one of the world's most valuable and fastest growing private companies, unobtainable until now by smaller investors like you and me. Charlie called these deals 45 years of asset accumulation now being monetized at the perfect moment. So now we know EchoStar is the SpaceX proxy. You need the right tools to time entries, stay updated, and find even more proxies for private market theme. That's exactly where Moomoo comes in. Fundamentals set the trend, but technicals time your trade. Under market position overview on Moomoo, you can instantly see average cost, profit ratio, and key support or resistance levels. It's perfect for spotting crowding and timing entries off confirmed support. Then there's technical sentiment. It aggregates signals from 15 institutional grade indicators, giving you a fast second opinion before you buy or sell. Next up, we have Moomoo's earnings calendar, which comes in clutch more than ever this time of year. You can track earnings histories, see expected versus actual results, and plan your trades around volatility spikes. And for my favorite feature, the advanced screener. You can filter by sector, theme, or institutional ownership trends to uncover other public proxies tied to private market themes. The best part of all this is my viewers get up to $1,000 in NVIDIA stock and 8.1% APY on uninvested cash. So hit that link below in my description or scan the QR code right here to start trading smarter on Moomoo. And now let's get into the math on my SpaceX proxy thesis. Let's do the math on EchoStar's SpaceX stake. EchoStar will own roughly 2% of SpaceX at a $400 billion valuation, worth about $8.5 billion at deal signing. The $400 billion valuation is locked for EchoStar as the SpaceX equity owner. In fact, it's already worth almost $12 billion at the time I'm making this video. That's 38% more with the most recent valuations we've been able to gather indicated by secondary sales. That's an unrealized gain of over $3 billion in just 2 months. Meanwhile, the last I checked, EchoStar stock went up just 1.4% in the last month, showing just how truly the market is not efficient here. Now let's apply ARK's public research and valuation model on SpaceX. ARK's base case values SpaceX at $2.5 trillion by 2030. If that happens, EchoStar's 2% stake will be worth roughly $50 billion. In ARK's bull case of $3.1 trillion, that stake alone would be worth $62 billion. For context, that's about 3 times EchoStar's current market cap, and that's from the SpaceX equity alone. You still get all the operating businesses like Boost Mobile, the cash, and Spectrum assets on top of that. Let me put this another way. At a $72 share price with 348.7 million fully diluted shares, which accounts for the company's convertible debt obligations, EchoStar's market cap would be about $25 billion. In total, as an investor, you're paying $25 billion for a company that after closing both the AT&T and SpaceX deals, I project will hold roughly $17 billion in net cash, $8.6 billion in other Spectrum assets, $11.7 billion worth of SpaceX equity, and $3 billion from its Boost Mobile subsidiary. That adds up to more than $40 billion in total net asset value today, or $116 per share, meaning the market is valuing EchoStar at nearly a 40% discount to the underlying assets it already owns or will own. And this value mismatch isn't even accounting for the rapid appreciation of the SpaceX stake and even Boost Mobile, which I think could have serious legs with its Starlink integration. It's also been reported Verizon is on the verge of purchasing some of EchoStar's remaining Spectrum assets, which would expand the company's cash pile even further. Now, you may be wondering why I'm projecting EchoStar to have $17 billion in cash over the next few years, despite having $27 billion of debt today, and the SpaceX and AT&T deals are only offering around $30 billion in cash. Now, this is probably the biggest thing that investors don't currently understand about EchoStar. The EchoStar holding company isn't responsible for paying off the debt of some of its subsidiaries like like Dish Network and Hughes Network Systems, which account for a very good chunk of their debt, $14 billion. EchoStar only plans to pay off $11.4 billion of its debt, which is tied to its spectrum assets as collateral. That means creditors to Dish and Hughes can't seize the EchoStar SpaceX stock or cash as collateral, which is why I'm basically marking these assets at zero in my NAV calculation. It would be great if they could somehow come back or get profitable, but overall, not too important. I'm also not the only one seeing this mismatch. Several Wall Street analysts have updated their targets after the spectrum deals, all significantly above the current price. For instance, Deutsche Bank and TD Cowen both came out at or above $100 per share. On the institutional side, 13F tracking clearly shows how hedge funds have been consistently loading up on EchoStar over the past year. I use a website called Wall Street Rank to see hedge fund trading data on any stock in the world. So get $40 off a Wall Street Rank annual subscription with my unique code at the link in my description. In my view, EchoStar's upside is so clear, and I think that's really supported by the conservative methodologies I laid out. Even in a disaster scenario liquidation event with steep haircuts to every asset that EchoStar has in a fire sale, I estimate EchoStar would still be worth more than its current market cap. And here's what I think is most compelling and a big reason why I wanted to share this video. EchoStar should trade at a premium to net asset value, not a discount. The closest publicly traded SpaceX proxy is DXYZ. It's a closed-end fund with about 50% of its assets in SpaceX, and it trades at a whopping 270% premium to net asset value. Think about that. Investors are paying $3 for every $1 of SpaceX exposure. That's because there's no other way to own SpaceX on the public markets. Private equity SPVs are liquid, non-transparent, and expensive. EchoStar is publicly traded, liquid, and has options available through 2028, and they're accessible to anyone with a brokerage account. For this reason, I actually think that EchoStar is going to trade at a big premium in the future once more retail investors realize this is how they can get exposure. And 95% of EchoStar right now is owned by institutions, so there isn't much float available to retail, so I could really see them having an impact. One analyst estimates that premium could be 40 to 60% or more, which would be another $12 per share once EchoStar gets rediscovered and repriced as the SpaceX proxy I'm making it out to be. Charlie Ergen recently said, if I could make one investment other than ourselves, it would be SpaceX. And I think that could be reassuring to investors. Maybe it even indicates he would buy more of it with the cash pile coming his way. One explanation for EchoStar's valuation gap is that many investors have developed a mistrust of Charlie after a history of expensive blunders and unfulfilled promises, and he still maintains majority control of the business. But I'm betting EchoStar embraces a new SpaceX treasury strategy versus taking risky swings in the future. An example of this has already happened. EchoStar abandoned its $2.5 billion direct-to-device satellite constellation project with MDA Space. In sum, EchoStar trades at a steep discount to its intrinsic value, but I think the reasons for that discount are temporary. Once the company demonstrates the promised transformation and the deals in question close officially, there's a strong rationale for this stock to catch up and then fly past its NAV. To borrow from the book of Benjamin Graham, I think the discrepancy here offers a very healthy margin of safety for investors. And I also see EchoStar being, a less volatile, strong safe haven asset over the next few years, no matter what the market does, as private valuations are typically more resilient than public market ones. For all the reasons I laid out, I've allocated a big chunk of my long game portfolio into EchoStar on Autopilot, a platform where hundreds of people are subscribing to my trades with around $500,000 of capital. This portfolio represents stocks I have the highest conviction in over the next 5 to 10 years, aside from my biggest position, Kraken Robotics, which I can't list on Autopilot. You can start copying my portfolio at the link in my description, and if you enjoyed this video, I guarantee you'd enjoy learning about another stock that has even more potential than EchoStar. Kraken Robotics is my largest position and my favorite stock right now, so you can learn everything you need to know about it right here.